Hey guys, I think Micron stock will be over $2,000 per share in the near future, and this is exactly why. Check this out. Amazon just said that they will continue to increase CapEx into 2027, and even at these amounts, they still will not have enough capacity to meet all the demand they have in 2026, 2027, and in fact, the demand they have for 2028 already is striking. This is a massive bullish signal. Let's talk about that in this video, guys. Like and subscribe. As always, the $1 million portfolio was up 1.22% today, almost at that 1.2 million. Really trying to cross that all-time high. Let me know how you guys are doing in the market today. Micron was up huge, 18%, up 3% in the after hours. Yesterday, Micron was down like 10%, and most retail investors, to be quite honest with you, yesterday when it was down 10% probably sold, and today after it went up another 18% probably bought back in, or they're just waiting to buy back in tomorrow when it's up, over 20%, right? That is the basic retail investor mindset. Now, just to be quite frank with you guys, you don't get to a big dog portfolio like this, over 1 million, by being a normal retail investor, right? And before we jump into the details about what Microsoft said and why it's bullish, we're gonna dive into that earnings call, what they said about continuing to spend on CapEx, specifically on memory chips for AI buildouts. I wanna point out the fact, the psychology behind a $1 million investor, right, guys? You're not gonna get to a big dog portfolio if you continue to act like a basic retail investor, right? And there's levels to this. And really quickly, I'm gonna just at a very high level point this out. The first level, if you did the research, if you understand your risk management, if you know the stock is gonna do well in the long term, level number one is you're looking at a red day and you're buying. You're genuinely excited to gobble up more shares. Then on the green day like today, you're pulling back and holding back, right? Because you don't want to buy at all-time highs or at recent highs. The second level and the more evolved investor doesn't even care what the price fluctuation is doing, right? You don't even care day to day, week to week, or even month to month. And that is exactly what I teach you guys in the private stock group. If you guys want to join, I have two groups here, the portfolio. You guys see what's in the portfolio, what I'm buying and when, and how to analyze stocks and the method to build a $1 million portfolio. And the second tier gives you, in-depth knowledge into the method, really into detail, gives you priority access and a 90-day challenge to apply that method as well. So guys, click that link if you guys want to join. But check this out, guys. Micron, SanDisk, and other chip stocks get major boost in the wake of Microsoft's earnings, right? So just a couple of days ago, China's company CXMT went public. Everybody was freaking out, right? Everyone's selling Micron, selling AMD, selling everything, selling their house and everything across the board, just because this China's company is coming out, right? That's overblown, guys. There's going to be competition, right? But obviously, we have geopolitical reasons why the US is not going to buy Chinese chips. That's been up for discussion. They think maybe they'll buy some chips. Bottom line, guys, China is not going to be a massive, it's not going to be a foundational threat to companies like Micron. It's going to be competition, of course, but the demand is going to continue to outstrip supply for at least the next 2 to 3 years. And I'll show you exactly what Amazon just said. Let's get into this. Amazon hikes 2026 CapEx to $220 billion due to higher memory costs, and Meta did the same as well. We'll talk about that in a second. Amazon reported better than expected revenue and cloud growth for the second quarter. And one thing to point out here, guys, is that companies like Google, Amazon, they are monetizing AI, right? So these cloud providers, their cloud revenue has been exploding year over year. I mean, AWS revenue up 37% year over year. For a massive company like AWS, that is a huge increase year over year. And they are attributing a lot of that growth to AI services and AI build out. Google grew their revenues for their cloud service, I believe, about 60% year over year. For a massive company like Google to grow 60% year over year, and they're attributing a lot of that to AI services as well. So the big dogs like AWS and Google and Microsoft, they are they are essentially monetizing the AI services already, right? So they expect to continue to keep spending money on this AI build out. So this is a massive bullish signal for chip companies like Micron, right? So let's take a look here. Amazon and Microsoft. First of all, let's look at Amazon's earnings. Earnings per share, 5.75 per share, $200 billion in revenue versus $196 billion estimated. Amazon Web Services up huge, 37%, and it's expected to spend even more on AI, with CapEx projected to hit $220 billion, when earlier in the year they projected $200 billion. And this is a theme you're starting to see here, right? The CapEx spending is continuing to go up, and they're directly attributing this to the cost of chips, right? So we see CEOs, CFOs from all these big tech companies, they're coming out and saying, hey, we're increasing our expected CapEx spend for 2026 and 2027 because memory chips specifically are going up in price. And these hyperscalers are continuing to buy the chips despite the fact that Micron and other chip companies are raising prices. This shows you that Micron has massive pricing power, folks. These hyperscalers are paying the cost, and Micron is going to benefit from that spend. And Amazon said that even with the expected $220 billion build out in 2026, they will not have enough capacity to meet the demand they have in 2026. They think this dynamic will continue in 2027, and so far it's looking like they won't even build out enough for 2028, which is 2 years from now. In fact, the demand we have already for 2028 is striking. So that's Amazon, right? Now let's go back to Microsoft. Microsoft earnings. Microsoft's responsible commentary on AI investments seems like good news for the companies on the receiving end of that spending. The company saw capital spending rise 70% in the latest quarter, inclusive of finance leases. They signaled it expects to record positive free cash flow in its new fiscal year, helping to soothe concerns that Microsoft might enter cash burn territory. So essentially, they are maintaining free cash flow. They are already generating revenue from AI spend, meaning they're getting an ROI from the infrastructure they're building out. And this is really calming the fears that a lot of people have had in the market that companies like Micron, having spiked an insane, I believe like 800% in a year, that this is not sustainable, right? People see these commodities like chips, they see the companies rocket, and they think this is not sustainable. But one thing people are not talking about, and I've talked about it in a previous video, is fundamentally the business of these chip stocks is shifting from a cyclical aspect, at least in the short term, to more of a long-term structural element needed for these data center buildouts. And the reason that's important is because, historically, Micron has been valued on a price to book basis, meaning, what are the assets worth that Micron holds minus the liabilities? And that's essentially the floor of the price for the stock, right? We're not really gonna pay too much of a premium because of the cyclicality, that cyclical nature of the stock. Well, now that it's expected that Micron is gonna have huge demand for at least the next 3 to 4 years, and even once they're done building out those data centers, they have to continue to update those chips as they're only expected to last about 3 to 6 years. So you'll get a continued cycling through those HBM chips. This puts Micron in a position to be priced at a price to earnings ratio, guys. Check out that price to earnings ratio. It's at a 19, but the forward price to earnings ratio is at about a 6, right? And this is because really, for the most part, the market is still not valuing Micron on a price to earnings basis, right? And for perspective, the stock market as a whole is usually at around a 20 to 21 forward price to earnings ratio. Micron currently at about a 6. But given the fact that all of the data points are pointing to breaking this cyclicality, continued pricing power, continued AI spend from massive hyperscalers, all of these signals are pointing to the fact that Micron is most likely going to be valued on a price to earnings basis. And it's only a matter of time until the market, all at once agrees on this, and that price, in my opinion, is going to rubber band to the upside insanely. And that is why I am building out my position in Micron in the $1 million portfolio. Again, if you guys want to see what I'm buying and when, click that link, join the private stock group as well. Another thing I want to point out is Meta shares actually sunk pretty huge the last couple of days. They are spending a ton on CapEx as well, but they're not doing a great job monetizing it, right? They're mostly using AI for internal purposes, which is really just a cost driver. It's not driving revenue. Like these cloud providers like Microsoft and Google and AWS, they provide those cloud services, and these AI services are growing those revenues huge. Meta hasn't really had that luxury, right? And you guys have probably seen the headlines the last few weeks that Meta is expected to launch their cloud service pretty soon, right? So what this means is that as Meta tries to find ways to continue to incorporate AI internally into its services to improve its products, improve its profit margin with like advertising and things like that, it's going to start trying to generate revenue like these cloud providers do, by providing cloud services and hopefully getting some revenue in the short term. And this is actually bullish for Micron and chip stocks as well, because the more Meta can monetize AI spend in the short term, the more likely they are to continue to spend. And again, that is a bullish signal for Micron as well. So guys, let me know your thoughts in the comments below. Did you sell Micron when it was down 10%? Did you buy it after it ran up 18%? Are you falling into the classic retail traps? Because if you are, folks, you're gonna have a hard time hitting that big dog portfolio status, guys. Let me know in the comments if you're bullish on Micron. I really do think it's gonna hit over 2,000 per share before the end of the year. And of course, join that private group, guys. If you guys wanna join the top tier, it's a 7-day free trial. Again, all the stocks I'm buying, why I'm buying them, how I analyze stocks, and my overall method for building wealth in the stock market. Thank you guys so much for watching, and I'll see you on the next video.